Hello, ancient traders. This is General Romulus coming to you live from the Forum in ancient Rome. We have a lot to talk about, but before we begin, always remember, I am not a stockbroker, financial advisor, or investment guru for your own trading, investing purposes. This is strictly educational, informational, and hey, maybe entertaining. Speaking of entertaining, it sure seems like the modern markets are a bit entertaining. Unless you've been short gold and silver for the last few months, then it's been kind of painful. But we've got gold, oil, interest rates, Bitcoin. Oh, and we can't forget the stock market itself. There is a lot. By the way, let me step back here just a minute. Would you really believe, we covered this a few weeks ago, would you really believe that the U.S. stock market is sitting just a couple of ticks away from another new all-time high? I don't have a problem with that. I don't have a problem with anything happening in the stock market, up or down, because personally, I'm looking for consistent returns regardless of market direction. I don't really care which way it goes. I can't control it anyway. I'm simply trying to advance my portfolio. It doesn't matter what happens to the markets. But a lot of people out there, they're kind of stunned by the fact that the U.S. markets are sitting here so close to all-time highs in an environment culturally, politically, environmentally. Boy, take your pick. They can find a million reasons why things are falling apart and absolutely getting so close to the edge of complete disaster. But as we'll see as we go around the global markets, not just in the forum, but all over the world, an imminent disaster is anything but coming in the very near future. Well, as usual, let's start with the S&P 500. Here it is. We've got a couple of yellow lines, 3 to be precise. They are horizontal, meaning they are going left to right as opposed to vertical, up and down. Why are they doing that? Because we're looking for areas of support and or resistance. Now, it was not long ago, about a week and a half or so ago, we put out a video talking about a breakout above. I'm going to lower this top line right above this area, which was somewhat of a resistance to the S&P 500 for a bit. It broke out above here. This is a fairly well-defined ascending triangle. It did break out, and then only to see it pull right back in. Why did that happen? It just wasn't ready, I suppose. It wasn't quite ready to get going. And it still might not be, even after going up for a few days in a row. It might not be. A lot of these squiggles and moves in the S&P 500 are coming from political machinations. Well, mostly Trump tweets, posts, and actions. He's talking about taking Greenland. Stock market goes down. He backs off a little bit of that. It goes back up. Then over the weekend, another unfortunate situation in Minnesota. A young man was killed during protests, and that threw possibility of another government shutdown into the reality. This morning, markets were looking down, and now here they are, right back up. It doesn't matter what seems to happen. We're either at or near new all-time highs. With this, however, we know that nothing stays the same, especially in the markets, forever. So they're always changing. And either this is going to break out here finally and get going and kind of grab that head of steam and put together a momentum type of move to the upside. And if this ascending triangle is true, and if this breakout holds without being another false breakout, and if the market truly is ready, then this should measure to about 7,300. So for me, 7,200, I tend to be a little conservative when it comes to my technical analysis measurements. So about 7,200, how long, how much time, when will it get there? Well, it took a couple of months, almost 3 months, to kind of come up and out of here. It could be all through the rest of the quarter, even April, May, before it does fulfill its ultimate destiny. If that indeed is the case, and we don't know that it is. We don't know that it is. It could be just another situation where it needs more time, or it could come right back down. Where would it come back down to? Well, we see this yellow line, the curving one. That's an average of 50 days of recent price activity. Got to come down below there as it did recently. And then more importantly, this area, which served as a little bit of resistance and new support, and this one down here. So you mark them, you got them, you're all good. Let's move on, shall we? We talk about oil quite a bit. Oil broke down last month from a descending triangle Ultimate target on this should have been $45 to $50 per barrel. It didn't happen. It ran right back up, turned back around. This was politically and newsworthy event due to situations over in Iran. Again, prices came right back up. How? We don't know, though. This could come right all the way back down into the low 50s, high 40s, which would obviously take a little bit of heat off of the possible inflation picture and add to that potentially upside move in the making in the S&P 500. So we've got two assets. We've got the stock market, equities, S&P 500, knocking on the door again of this all-time high, again trying to come up and out of there, again putting together an upside momentum move. We'll see if it holds. And oil, which really has been stuck in a trading range for some time. It did break down temporarily, only for a couple of days. Looked like it was going to be heading much farther south, and then started going right back up. Looking at both of these situations on a weekly chart, see the W up there? That means it's on weekly. Each one of these bars, green and red, represent a full week of trading as opposed to what we had it on before, which was just 1 day of trading. Okay, so we look at it on a weekly chart. Here's oil. Represents pretty accurately what we already discussed. This descending triangle is now moot, so we're just going to throw it away. Okay, see, we're getting rid of that nice and easy. It's gone. Yep, like all the snow out my window. Hopefully within a week or two, that'll be gone. But we got covered up. It didn't even snow much in ancient Rome, but we got slammed the last couple of days. A weekly chart of the S&P 500 shows more clearly how close it is to that new all-time high. You see, that certainly looks like a bullish picture. Looking at the interest rate situation, Federal Reserve, today is Monday, January 26th. The American Federal Reserve meets again Wednesday, January 28th, 2 p.m. Eastern Time. We will see. They will not change interest rates again. I don't know if you heard it here first or not, but they will not be changing interest rates. Everyone's kind of hinging around what they say after the announcement of the no change, and that may not have much of a change either from the December meeting. See, they cut in September, they cut in the end of October, and they cut again on December 10th. 3 25 basis point cuts each, and now looks like they're ready to stand still. Well, that won't be too long, though, because current Fed Chair Jerome Powell, his time runs out April 30th. He will be turning back into, well, according to Trump, a convicted felon, because he's got a Department of Justice, let's say, investigation looking at him for potential charges that he overspent or was not truthful about renovations going on in the Federal Reserve building in Washington, D.C. But we have a new Fed chair coming, and it's really only a couple of months away. In the big picture, that's no time at all, especially when you're an old Roman sop like me. That'll come around quickly. And whoever comes in next will be an interest rate cutter, or Trump just won't hire him. We already know ahead of time that's going to be happening. So another couple of months of this, and then we'll start to see it. However, here's a caveat of large proportions. If oil does keep going higher, and it breaks this yellow line and goes up into the 70s, 75 or $80 a barrel by the March-April timeframe, the Federal Reserve will not be able to cut interest rates because inflation will start to head back up across the board. That is not the case right this second, so we'll just have to see how things unfold over the next couple of months. Now here's a picture. Here's a chart that definitely has my attention and my interest. This is the euro against the US dollar. When this is going higher, it means the euro is gaining value against the US dollar. To get an inverse picture of that slightly, see, I just drew that up. Okay, so what we're seeing here is the euro against the US dollar. Again, when we have green bars on this chart, the dollar is losing value or the euro is gaining value against the US dollar. And you see it broke out over here after this consolidation that took place that was going on for 6 months. This was a 6-month consolidation, and then it broke out. Okay, the highest level that it's been at, the euro against the dollar, since you got to go all the way back to 2021 before, since the last time it was at that point. This, again, typically in the world of technical analysis, this is something that should hold, and that should see follow through. But of course, we've seen that before with the S&P, broke out from a very textbook ascending triangle and didn't hold. We saw oil break down from a very textbook descending triangle and didn't hold. So the euro, but this looks like it should and could hold and start building some momentum to the upside, maybe coming up. I mean, if you look at the measurement, 115, 119, so 123, 124, we got to go right about here or so before they stop moving. How long could it take? Well, it took 6 months to come up and out. It could take 6 months to fulfill its destiny. And its destiny, according to the technical analysis pattern that we were looking at, is about 124, give or take a couple of shekels. Go back over the last month and a half. We have had plenty of videos talking about cryptocurrencies and Bitcoin. We still have this picture on a weekly chart. Bitcoin comes up and out like so many other things and then falls right back into the trading range. Now at the bottom of the trading range, a little bit of a rebound today, but it is at the bottom of the trading range. My belief is that it breaks below this white line, roughly 85,000 and a couple of shekels. I should say denarius, a couple of ancient Roman denarius. If it falls below there, that could see 75,000. That would be a logical target, but we'll see. Does it break down only to come right back in the way so many things are doing right now? Well, we shall see. A couple of trends seem to be in place, though. Again, the euro breaking out, that does seem to be in place. Another aspect is European stocks. See this? This is a bit of a run for sure. They are moving up. Emerging market companies and stocks are moving up. And gold and silver is moving up. Okay, gold, silver, they're moving up as well. Here's silver. These suckers, gold, silver, and the metals are vastly overextended on the upside. They are tremendously overbought. I wouldn't chase these things with an enemy's money. Well, depending on the enemy, maybe you can come up with a name and I would let them lose a bunch of cash and probably not feel too bad about it. But you get the point, and I would not chase these. I wouldn't chase the European stocks. I wouldn't chase the emerging market stocks. All these stocks are overextended, overbought, and in need of some kind of a pullback before they gain my interest. Now, they don't have to pull back. I won't buy them. If and when they do, however, over the next couple of days, weeks, or months, that will pique my interest, and I will probably start to buy them as well. U.S. small caps are kind of in this as well, although they're not quite as rambunctiously running to the upside as Europe or the emerging markets. There's a sell America trend that is going around the world right now. Will it last? I mean, is it multi-year, multi-decade? Probably not, but it could be. It's probably not, though, but it could be. And so we want to simply look at this as an opportunity to buy these things on the dip aspect. I'm not chasing them. I mean, it's your money. You do what you want. Again, I'm not your advisor, but that's not how I do things. Nothing moves in a straight line forever. And if you look at gold, that has been certainly a straight line. Silver, even more obvious, that is a straight line. And nothing moves in a straight line forever. Last correction in silver, not that long ago, a couple of weeks, about 10%. Last correction in gold, about 5%. And then one over here, that was about 5% as well. So there's more likely to see a correction of between 5 and 10% in the gold and silver and a lot of the metals over commencing sometime in the next few weeks. U.S. stocks, well, that's really going to depend. Let's go back to the daily chart now. That will depend largely on not the interest rate environment. The Feds are not going to cut rates. They're probably not going to say too many different things than what they said in the December meeting. So that's not going to be much of a surprise. Employment picture remains fairly robust. Inflation is somewhat subdued. It's kind of stuck in the high twos, but dramatically better than it was 2 and 3 years ago when it was knocking at 10%. So we have a decent inflationary environment in the United States. Don't know about your country, but not too shabby here in America. However, the next stage of this bull market that started a little over 3 years ago in late 2022 will really depend on the tech stocks now. We've seen the financials. Okay, they all came out, JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, Wells Fargo, Citibank. And these companies are all down pretty much, except for Morgan Stanley and Goldman Sachs, I believe. Even they're down, okay? The entire sector is down from where they were just prior to the earnings coming out. And that didn't help the market, obviously. So now it's going to depend on the tech stocks. See, Wednesday night after the Fed meeting, Wednesday is going to be great. Boy, it is going to be like an all-out 10-on-10 brawl in the arena to the death. Can't wait for it. All right, so Meta comes out, Microsoft comes out, Tesla comes out. This is all Wednesday night after the Fed meeting. This will be after, this is 4 p.m., starting at 4 p.m. Wednesday, January 28th. So 3 big tech companies, Microsoft, Meta, and Tesla. That could do a lot for the market if they're all saying, if they all beat the estimates and they say good things about the next quarter or two, that they feel they're going to beat the next round of estimates, these stocks will go higher, the market will go higher. Most likely it'll break out of the trading range that it's been in and most likely put on a little bit of momentum on the upside. So it's going to be more likely than not a news-related type of situation. But even without the news, I have to say that I am impressed with all the potential negatives that you can find out there in the entire world, that the U.S. stock market is still sitting here so close to new all-time highs. Western Europe at new all-time highs. Japan fell a bit, but not far off of new all-time highs. China, not sure about, and they're stuck in a bit. And Brazil moving with the emerging market stocks just off of new all-time highs. All right, you got all that? It was a lot, wasn't it? Don't worry. You want more? You can always contact me directly, RomulusTeaches@yahoo.com. Again, RomulusTeaches@yahoo.com. I answer all the emails over there and would love to hear from you if you have any further comments, thoughts, or questions for General Romulus. Oh boy, yes, that's right. So thank you very much, everybody. Appreciate your time. It's been great to be with you. I've got to go back to the Foreman Ancient Rome. Like I said, Wednesday, we've got a 10-on-10 fight to the death gladiator brawl in the arena. And then we're going to head over to the Circus Maximus. We've got some horse races. And then it's going to be a bit of a food fest in some mansion on the Palatine Hill. Life is good in ancient Rome, is it not? You got it. Thanks for coming, everybody. Look forward to seeing you again soon.